if you're growing a business, there's going to be those sort of scary moments, for example. So we've gone from 5 staff to 18 staff in a couple of years, and that in itself, I've got the payroll cost that keeps me up towards the end of the month. Like, are we going to make it? But if everybody does what they need to do, we've got work in the door to do.
If you're still running your business accounts the old school way, spreadsheets, shoeboxes full of receipts, and late night panics about tax, you're not just behind, you're risking everything. Today's guest is someone who is dragging accounting, kicking and screaming into the digital age. Matthew Hunt from Digivolve is here, and he's about to show us why going digital isn't just a nice to have, it's an essential. Now get ready for some straight talk about what you're probably doing wrong, how to fix it, and why digitizing your accounts could genuinely transform your business. If you care about your business, and I'm presuming you do, and your finances, and staying out of trouble with the HMRC, don't go anywhere. Matthew, welcome to the podcast.
Hi, Chris. Thanks for having me.
Welcome, mate. I'm really glad you've joined us today. I mean, before we sort of get stuck in, can you give us like a potted history of sort of who you are and why should anyone listen to you today on the podcast?
Yeah. So been an accountant ever since I left school. When my dad went self-employed when I was still at secondary school, I pretty much said that's the career I want to go into, and I've stuck with it ever since. So been doing it for sort of 20 years now. Don't know anything else apart from fixing a few broken computers and all the IT in the office as a second hobby. But yeah, so watched the industry change over all those years, going through an apprenticeship onto chartered exams, and then becoming my own practice that got going in 2010. And it's just been growing then for the last sort of 12, 13, 15 years now. Mainly working with SMEs, owner managed businesses. So yeah, all the things that keep directors up at night, we're sort of answering those questions on a daily basis, trying to sort of help people sleep at night a bit better.
Whereabouts are you based, mate?
So we're down in West Sussex. So we're about in between sort of Gatwick and Brighton, really, in a place called Haywards Heath. So I can get a train to Brighton in 14 minutes from my house. So it's a pretty nice place to be.
And where do your clients come from?
So I originally grew up in Surrey. So I've got quite a client base up there. And then since moving down to Sussex in 2013, I'm now building a sort of stronger base down here. But it's all over the UK, really. So it's Zoom calls, Teams. Normally it's just a word of mouth recommendation, and then that leads us into sort of a totally different area. I've got clients up in Leicester, Newcastle, places like that, really. So as long as they talk English, I'm good.
I mean, everyone starts somewhere, and you've mentioned you've done this, you know, it's all you've ever known. How did you actually end up in accounting? And sort of more specifically, why did you stay?
So I was pretty adamant that from day one, I always wanted to be a partner. And, you know, that looked like me working in a big sort of London company to begin with, and thinking I was going to make it and be one of the big partners there, to essentially working for a much smaller company that I wasn't working on big multinational audits that didn't resonate with me at all. I couldn't advise them. They weren't in my league as such. So when I went to that much smaller company and I was working with builders, tradesmen, digital marketing, all the normal, your neighbours basically, that sort of built my confidence now that I can talk to my neighbour and take on their accounts quite comfortably and know everything that I'm doing on it as such. And that's then just sort of snowballed into what we have now, really. And really, I just like helping people. It's got enough momentum now that I just spend my time problem solving, trying to keep the staff happy and the clients happy. and see what comes out the other end, really.
I've noticed colleagues of myself that have sort of worked with, big insolvency firms, and they're it seems a bit boring. Like when we have a chat and sort of I tell them what I'm working on, and
Yeah.
like no 2 days are the same in this office. But then I go, well, how's everything going for you? And it's like the common theme, and I would say this for everyone I know who's gone to the the cities, to the big firms. It's not what they thought it would be like.
Yeah. I think that these big firms are so big that you get lost in them, really. Whereas, again, same as your business, we're in it day to day. Every day is a different problem, and it's something that you might not have come up with, but you just have to get stuck in. And when you get the result of the other end, it's really rewarding on the flip side. We'll see companies come in that are maybe struggling because the previous accountant's being rubbish, and then we're turning it around, getting them the information we need, and then giving them sort of 18 months tax planning, and like, right, here's your tax through for the next 18 months. And then you've either got a good situation where you've got the money in the bank and you can maybe have a bit of a spend up, treat the wife and the family to a holiday, or you maybe got to chase your tail a bit and catch up. But trying to save £6,000 over 18 months is a lot easier than trying to find £6,000 in a month, as I've always found. So it's just giving clients that foresight, really, that just makes it doesn't keep them up at night, really. They're a lot more relaxed.
And I think we can make like a huge difference at that sort of level. That's what I've always believed. It's like, if you're like a 10, 15 million pound turnover business with you've got a FD in there all the time, you might work with KPMG. Like they play in their own field, but like I know if I get a client to me, they don't know what options that they've got. And I know within an hour I can go, right, this is the problem. Let's talk about these solutions. And like we've talked about sleepless nights. That's one thing we can almost guarantee is we'll give you a better night's sleep tonight. I mean, my experience with me, I've been that guy. I've been that business owner that got surprised every 12 weeks with a bloody VAT bill.
Yeah.
And then got surprised again when a corporation tax bill come, and it was like, and I remember the dread, knowing in the back of my head, I knew it was coming. I knew it was, but I had no systems in place. I had no real financial education on how to run a business. That's the honest the honest truth.
Yeah.
And I learned from real bitter experience. And it just got to the point where it was that painful. I'm like, I can't keep putting myself through this. And I had to educate myself.
Yeah.
And today it does. I mean, every now and again, I can have a moment at a weekend going, oh God, are we growing too big?
Yeah.
Or have we got enough? Have I got that right? Was that the right thing to do there?
Yeah.
But if I go back to my budgets, if I go back to my forecast, if I go back to my profit and loss, I can go, you're worrying about nothing.
You're not doing it blind to an extent. You're looking at the numbers and saying, right, if I hit that target every single month, I've got that much coming in, I know what's going out. If you're growing a business, there's going to be those sort of scary moments, for example. So we've gone from 5 staff to 18 staff in a couple of years, and that in itself, I've got the payroll cost that keeps me up towards the end of the month. Like, are we going to make it? But if everybody does what they need to do, we've got work in the door to do. We've got stacks of work on the desk. I just need more hands on it to get it out the door, so to speak. So it's just about trying to keep everyone in the business doing what they need to do. But as you know, we're always juggling the HR, the accounts, the client retention, getting new stuff, getting the work done, HMRC breathing down your neck every 5 minutes, changing the goalposts. It's relentless. It comes from all angles. And the amount of times I've sat with a director that's come in and he's, at the end of it said, "Oh, cheers for that therapy session. I feel like a weight's lifted now," and they go out happy, sort of thing.
Yeah.
Business can be a lonely place at times, particularly if it's not going well. You might not want to talk to your wife or partner about it. You don't want to admit that the business is failing because it's your baby at the end of the day. And sometimes you might need that harsh reality check that if you don't do something soon, this is all going to implode pretty quick, sort of thing. And from talking to yourself, that isn't the be all and end all as such. As you say, it's about getting the advice and just seeing what's out there before you make any sort of rash decisions and ruin everything you've been doing for the last 5-6 years at times.
Why do you think there's so much, probably the best word is financial illiteracy with business owners?
Yeah. I mean, if you watch any sort of online content now, it's always about this stuff isn't taught in schools. You might have done a business study exam or bits and pieces. It doesn't teach you how to run a team, how to get people together, build morale, look at the figures, what's a P&L on a balance sheet. Half the people don't know. You'll often speak to a client and they'll say the tax is 20 and 40%. It's like, well, it is if you're self-employed or employed. Then we factor in limited companies, corporation tax, different rates of tax. You've got VAT, PAYE, self-assessment, P11D, all these funny buzzwords that are common knowledge to me, but a client will come in and they don't have a clue. So we've got to steer them in there. And Dave down the pub's always doing us a favour, giving out his advice left, right and centre. And unfortunately, just because your mate's done it and got away with it doesn't mean that it will always work forever. And now they're really clamping down on this sort of compliance at the moment, it seems like. And what we're seeing is almost sort of a shake the tree and see what falls out, so to speak.
Absolutely.
HMRC can just blanket send 1,000 letters to loads of people and then just wait for the replies. They don't have the manpower right now to deal with those letters. But who cares? If they get something, then you say, just see what comes out, sort of thing. Which is a bit worrying for us because it's a lot of additional work, and HMRC won't deal with it in a relevant timescale, and that just escalates the director's anxiety because they're like, "Oh, Matt, I got this letter through the post. I need to do something really quick," and we do our bit, and then HMRC. I mean, I've had letters take 6 months to be replied to from HMRC, and if you try and progress chase it, you just get the reply is not due until October. You'll just have to wait. Sorry, you can't chase us till then. Now, that's not really good enough, if I'm honest.
What are you seeing with the revenue at the moment? It's a really good term that people, they're shaking the tree.
Yeah.
Specifically, what are you seeing with your clients? What are the problems that they're facing with the HMRC today?
So
it's probably going to go out in June 25.
Okay, so the latest one we're seeing at the moment is VAT investigations wanting to go back 4 years. I've probably dealt myself with about 7 or 8 investigations my whole career in the last 18 to 20 years. And I've had 4 on my desk in the last couple of months, so to speak. Now, that's a marked improvement on what was there before. Touch wood, we do everything correct and we've got all the receipts, and that's why we have our systems in place so that it isn't a scrabble to go and find all the receipts and look over your shoulder, so to speak. It's like, hey, look, the letters come. We've got all the paperwork, we'll just deal with it, sort of thing. If they ask any questions, we're all above board. And if you are worried about something, best advice is get out in front of it and open the meeting with, okay, we've gone through the records, we have found XYZ mistake, we're going to sort that out, but let's see what else you find, so to speak. The rumor always is, if they can find something to pay them the 300 quid a day that it costs to send the inspector out, then they're going to have a happy day and they won't dig too much deeper. But that's just the rumors I've been told.
So let's sort of dig into a VAT investigation.
Yeah.
What are they looking for? What are they looking for, and what's the likely consequences of if and when they find stuff?
Yeah. So the normal bit is, let's say you're a builder, for example, and okay, you've maybe done some work on your own house, as builders tend to do, and you had a load of materials delivered to your home address. I've seen HMRC go through your purchase invoices and say, right, these £5,000 worth of patio slabs that got delivered to your house, show me the sales invoice where they went on a job, so to speak. And ultimately, if you can't show where those materials have gone, that's when you start running into problems. One of our ones, the client actually rented a workshop, and we had to go as far as showing them a copy of the lease, because it wasn't any of the directors' personal homes that the materials got delivered to. The timber was delivered to the workshop, where it's cut up and then taken on site afterwards. And we basically had to show HMRC the lease and the rent payments going out to prove that that's the reason why these materials going to that site. Now, I don't know where the materials go once they get to the job or the site, but that's the sort of thing that they're looking for. If you're buying lots of materials or things in cash, for example, and you're not drawing any cash out of the cash point from your business account, it's fair to say that they have to assume that it's undisclosed income. You can't go and spend £100 in the builder's merchants and not take any money out of the bank. Where did you get it from? And that just leads to HMRC doing their own sort of checks from there on, really. But they'll go through the records, they'll check that you register at the correct time typically. Did you go over the VAT threshold early and not register on time? So have they lost any money there? And whether you're applying the correct VAT treatment, and okay, are you claiming VAT on a car, for example? That's quite often. The amount of times I've told a client, sorry, you can't claim the VAT on a car unless you're a taxi driver or a driving instructor, and they sort of get the hump. But even a company car, you can't. Commercial vehicle, different, but company cars, sadly not. The only way around it is to lease it, and then you can get 50% of the VAT back that way. But that's typically what we see going on, really.
I mean, let's just play that patio slabs and patio doors that have been delivered to somebody's house. Clearly, it's found that it's been put in the new house.
Yeah.
What's the consequence there then? What? So let's say they found 15 grand's worth of materials, doors and slabs, and that they've had a new patio and put some new patio doors in.
Yeah.
What do they do?
So number one is, well, let's say it's 15k plus VAT, so it's 3k of VAT that's been, in theory, fraudulently claimed at that point is the honest truth. If you bought materials for your own house, you shouldn't have claimed the VAT on it. That's the short answer. So the HMRC have like a penalty scheme, which is you have prompted and unprompted. So did you open the meeting with like, oh, look, we claim VAT on some materials that I need to pay you back? Or did you wait for them to find it and ask the questions? So that's a slight difference there. So that might start at 10% penalty if it's unprompted, for example. Then you've got deliberate, careless, reckless. Then they assess your risk appetite. Was it just an honest mistake? It slipped through because you were busy working on loads of jobs, or is there a pattern here that you're regularly doing it, sort of thing? If it's just a one-off, you could probably say, well, it slipped through the net, so to speak. If that's the one thing that they find, you'll probably be able to negotiate maybe a 20% penalty, 10% for the prompting, and 10% for the fact that it was careless, and then obviously interest, because if you've had the money that you weren't entitled to, they'll add that on as well. So pay the VAT, the £3,000 back, 20% penalty on top, and a bit of interest, a slap on the wrist, and that would sort of be as bad as it gets, sort of thing.
And what do they do about the other 15 grand, which presumably should actually go on their DLA for that day, year? What?
So it really depends, because ultimately, in a VAT investigation, you're just dealing with the VAT inspector, for example. So they would make recommendations for the other things, but typically they would just pass it on to another department that might then come and look at you again for something else, so to speak. They don't tend to want to do any more than what they are coming out to do, if that makes sense. Like, I'm here to check your VAT returns. They'd obviously look around at other stuff. They're also looking at, do you have any suppliers that you pay over 90,000 to, for example, that are not VAT registered? So, let's say you're a subcontractor working for me, and they can see that I've paid you £110,000 over the year, and you're not VAT registered. That leads them on to the next investigation, and they just follow it down. So sometimes clients will say, "Oh, Matt, why do you think I've got this investigation? Is it just luck of the draw?" And it's like, well, sometimes it is. Other times they might have been investigating one of the sort of your customers higher up the supply chain, and it's come down to you because they found something in their records that they're not sort of too sure on, and they want to maybe come and have a dig around your stuff. So that this supercomputer that they've got is a little bit worrying, because it can benchmark your business with another business in the same industry, in the same geographical location. So, okay, one builder's putting 10 grand's worth of, I don't know, fuel receipts through in their accounts, and the other guy's doing 5, and the turnover's the same. Why is there such a difference, for example? Again, wouldn't take much to then use that data that AI can literally give you in seconds now, and then go and make sort of some educated inquiries. So we do need to be a lot more careful than people have been in the past, I would say.
So, I mean, I hear it all the time about keeping receipts. How important is it to keep all your receipts in your business?
So there is sort of a bit of a de minimis limit. So, they're not going to expect every £5 lunch receipt, for example. But in the case of, again, I use builders because they're sort of quite topical. So if you go into B&Q, for example, there is obviously £100 on your bank statement that shows that you did physically spend £100 at B&Q. There's no question about that. But you could have brought a garden chair for your garden, or you could have bought materials for a job. So to some extent, that's when the receipt is needed, because you need to prove to HMRC that purchase was for business purposes. Without the receipt, there's obviously a chance that while HMRC would agree that yes, you could buy something related to your business in B&Q, I don't actually know at this point what you bought as such. So again, we kind of work on the probability. If you've got 95% of the receipts and you miss one, they just ask for another. They'll sample the data. So, right, here's a list of your 10 biggest purchases. Can I go and have the invoices for these? If you can produce all 10, tick on to the next thing, sort of thing. If you fall at the first hurdle, they're not going to be too happy with you, and they're going to want a bit more from you, because you don't necessarily look like a credible person if you've got no receipts whatsoever. Now, Amazon's a big one, for example. Clients will often say, do I really have to get you every Amazon receipt, for example? So The short answer is yes, but I understand that if HMRC came round, I could literally rattle through my Amazon order history and get all of those bills when I had to put the effort in, shall we say.
Mm-hmm.
But our approach would be, look, a minute, 5-10 minutes once a quarter just to download all your Amazon history, and then you can do it and forget it. We'll never have to come back to that, as opposed to me having to come back to you in maybe 3-4 years time and ask you to go back over old things. That's our approach. And also we'll try and take it right back to like day one with a client. If you're buying something on Amazon and you've got your personal card and your business card, just pay for it on the business card. At least that gives me a trigger point that it's gone through the business and I can ask you for that receipt. And then anything that's personal, you put on your personal card, and then we don't care about that sort of stuff. So if you can be disciplined at using your bank account to kind of tell the story, then it gives us a narrative to kind of help you find the receipts and the paperwork if you do lose them. If you put everything on a personal credit card and don't send me the receipts, it's a lot harder for me to try and claim. It's not harder for me to claim it as such. It's just more work for the client. We're trying to make things easy. What could you do? You're trying to price jobs, get work through the door, do the work, get paid, chase people, get your money in. You've got enough on your plate. You don't want me like, oh, Chris, have you got your £5.99 Amazon receipt from last week? You're like, oh, don't worry, Matt. It's like £1 of that. I'm not bothered. Let me go and worry about the bigger picture. But every client is different. Some people care about the 20p's. Others just like, oh, I don't care.
I mean, because we've gone around, and that's why I like there to be no real structure on these chats, because they're more interesting.
Yeah.
We've talked about HMRC. We've talked about, problems with investigations. But you sort of talk about, listen, how is it that you can make this an easier process? What should everybody be doing out there right now?
Yeah. So in theory, you do need some software, whether you like it or not, because having that structure will allow you to put things in a regimented way. And unfortunately, that costs money. And our default is Xero and Dext, and you're looking at 43 quid a month out the door before you've even started. But the information that you will get from having that structure will allow you to run the business so much easier. So it's worth its weight in gold, really.
What's Dex?
So Dext is it's an app that's sort of like data extraction. Mm-hmm. So Xero has its own one called HubDoc. QuickBooks has got sort of Smart Capture, Free Agent. They've all got their own sort of built-in OCR stuff now. But we've used Dex for years here, and the staff all love it. It's quick, and you've got an app on your phone, and you get in the van, you take a picture of your receipt, upload it to us, and that's the end of it, sort of thing. So we find clients live on their mobiles. So if we can give you the tools in your pocket, you're sat down for a meeting, you're on the train, sort of thing, snap a picture of your train receipt, off you go, sort of things, done, dusted. Like, what tools can we give business owners that mean that they can do more on the go as such? Because we're always, depending on your industry, you're not sat at a desk putting loads of stuff through on a computer, so to speak. We've got to tailor the product to sort of work with a client.
You mentioned, so basics, you need some type of software and like a Dext or something else. What else? What else do we need to be doing?
So if you're a limited company, definitely have a limited company bank account. The amount of times that we see clients go from a sole trader to a limited and they haven't moved the bank over, and it's like, well, that is a problem, because technically none of this money has ever belonged to the company. So that's a given. And look, business has changed. It used to be that you'd get charged £8 for having a business account, for the bank manager to never see you and rip you off, basically. But now, with the likes of Metal, Tide, Starling, although they're difficult to open at the moment, you can get a free business bank account. So it's not the hardship that it used to be. So that definitely needs to be done. And even if you're a sole trader, having a separate business account and a separate personal account, and when you're buying that item, is this a business purchase on the business card? If it's 100% personal on the personal, if it's a grey area and you're not sure, put it on the business, and then we'll get sight of it, and then we can have a conversation. Oh, Chris, we can't put that through because of XYZ reason, or we can put that through because of it. So then there's the education piece there where we can then help clients and help them do stuff better.
I mean, I'm going to jump in there though. That's assuming that the client actually talks to their accountant more than once a year.
Well, we talk to our clients a lot more than that. So we have like a doors open approach. I'm always sort of chatting to clients and trying to sort of solve problems, because that's how you get under the hood of like what's working. Because although we're operating for the company and the director, there's a family alongside that, and you've got to kind of sometimes take a step back from the small bit and look at the bigger picture. Does my action here have an opposite reaction for the director? Is that to the detriment to them, or is it balanced up overall? Some clients will just have their accountant pull all the money out as dividends, sail past 100k, and then they lose their tax-free childcare, for example. If I had a conversation with a client and told them, don't go over 100, this is the plan to stay at 8,000, and this is the reason why, you might get 2,000 a year of credit for your childcare costs.
Can we just stop on that point? Yeah. Just wind back in and let's go into that in detail, what you just said to me. So yeah, director has drawn out 100 grand in the business, personally, or split between them and a partner?
Well, ideally it would be between them and a partner if that's suitable, but again, depends what the wife's up to. That's why we have to get to know the client to know really what's going on. And
the tax liability on that is going to be how much?
So if you're pulling out 50k personally, the tax is a little around 3,300 per director. So you could be looking at 6,600 personal tax on pulling 100k out of a business in a tax efficient way. You do have to pay about 18 to 20 grand of corp tax to have that 100k profit to distribute, but again, that's sort of a separate issue. But here's where it gets interesting. Client draws out 50k each first year and they've got 6,600 of personal tax to pay. Quite happy. Year two, they take an extra 10,000 each and they end up on 60,000. The tax between 50 and 60 is no longer at 8.75%. It's at 33.75%, 25% extra. So all of a sudden, this 3,300 tax bill has pretty much doubled to 6,600. It's gone up by 3,000. And then to make it worse, you've got payments on account that kick in. So because your bill is now 6,000 and you've only paid 3, you've got a shortfall of 3,000 to pay, and then 3,000 on account. So a client will say, Matt, I've pulled out 10,000 and you're getting me to pay 6 grand of tax. I've pulled out 20k as a couple and I've got 12 grand of tax to pay. What was the point, for example? And I'm moving clients up to 60,000 now because the child benefit cap increased. So to make matters worse, when the child benefit cap was 50,000 and you'd lose all of your child benefit at 60, if you've got 2 kids, we're then throwing another 2.5 grand of child benefit to go back on top of that extra tax. So it was really compounding the problem quite seriously for those clients. So and that's why I say you've got to talk to your clients. You've got to sit down and have those conversations with your accountant and be like, if I do this, what will happen to me? So that you're not sort of coming and having to speak to someone like you because you haven't got the money to pay the tax because it's crept up on you. I had a quite distraught client come in just after January because she pulled all the money out of her company to do her house. No problem, she was earning the money, but she then had a whacking great big tax bill that she was unprepared for, and she basically had to go and take out a loan with the bank and do a payment plan with HMRC. And she was quite distraught about that, really, and she's only just now recovering 18 months down the line because this tax that she was not prepared for has taken such a long time to kind of resurrect. She's still got to earn and still pay her bills and chip away at tax on money that she's already had. So we just mapped out a plan with her, said, right, if you stick at this level, this is what your tax is going to be. This is what I need you to live on. She's got a very nice husband that was able to cover some of the house costs so that she didn't need to draw as much money from the business. And I'm happy to say that now she's sort of back on track and she's just about starting to recover. But it's been painful for her, definitely going from 6,000 a month that she was drawing down to basically 2, because she's got to cover all the tax and the loan and just catch up, really. So it's difficult.
I think one of the things, so we've sort of talked about what people need to be doing is software, obviously bank account, watching what you're paying yourself. And it's all been encompassed with taking advice from your accountant regularly. Okay. So let me tell you what I see all the time. And I get a director who's come to me. He says, Chris, it's all going to hell in a handbasket. Okay, let's have a look at what we've got on Companies House, a red flag. Let's pull some accounts up. The 18 months out date, okay, not uncommon sometimes. I say, well, where are we today? Because that snapshot of the future is no use to us right now. And they don't have anything. They may have zero or QuickBooks, a free agent. And I say, is it up to date? Send it me. Well, this tells me you've got 100 grand in the bank. He says, well, I haven't. I'm 30 grand overdrawn. So there's such a disparity with directors of all sizes. This isn't like your small one-man bands either. Like you, it's astonishing to see that businesses with quite a high turnover still don't have this in place. What is that? What does a director need to be looking at a set period, whether that's a month or a quarter? What's the absolute basics? What do they need? Everyone's got to have a finance function, Matt. What's the ideal finance function in your eyes?
So we always typically start with the director's personal costs, for example. So if you came in through the door, right, how much is your mortgage? How much are your bills? And what do you need to live on per month, for example? So if you say I need 3,600 a month to cover all your bills after tax, then I'm looking at getting you like 4K a month out of the business to then put sort of £300 aside to cover the tax. And then I work it up. So in order to have 4,000 for yourself, what does the corp tax bill look like? What are your overheads that you're kind of expecting? What's your profit margin on materials? And I get to a turnover figure, because clients love turnover. They don't care about the other stuff. If I say to a client, you need to hit 7.5K a month to make all of that work, they're good as gold. They'll go and give it a go. We can even break that down into tradesmen and say, right, 7.5K, I don't know what it is, but let's say it's 250 a day. That's what you need to charge your customers. If you want 4K a month out the bottom to yourself, this is what you need to do in a day rate sort of thing. And all of a sudden there's this light bulb moment where clients are like, oh yeah, I'm doing 250, 300 a day. Then we come into, well, if that's not working, the costs that you've told me are obviously wrong. So then we have to drill down into that, okay, I bought a new laptop, treated the wife to some bits that I shouldn't have done. something went wrong with the car and I had to pull a load of money. There's always unexpected costs. And as you say, if clients aren't keeping their software up to date, they're not on top of it. It's very easy for a client to say, well, Matt, I just take my 4K a month. I don't know what you're talking about. Well, where did you pay your personal tax bill from when it came round? Oh, I paid that from the company. Well, that's not a company cost, that's a personal cost. So now you've taken another 3K from the business that you weren't in. It's not that you weren't entitled to it, it's just such a massive increase in the tax if you're unaware of it. And I don't want to sit and babysit a client. We want to basically set the parameters and then let the client go off and do it themselves, so to speak. But just don't let them go blindly into business and just draw all the money that they earn straight away and have nothing put aside, because that's just a recipe for failure, really. Because you get to the end of the year, they've taken all the money out, and then you put the corporation tax in the accounts, and now you've got an insolvent company, so to speak. And then the dividends are illegal, and then that's a whole problem that we need to unpick and solve.
Can we get into, for me,
Yeah.
the number one problem right now?
Yeah.
The number one misunderstood problem, and it's directors' loan accounts. Okay?
Yeah.
Because they're problematic whether you, I mean, they become really problematic if you're talking to me. But
Yeah.
can we just sort of try and, in your own words, what is a director's loan?
Yeah.
Let's just, flip that around for a few minutes.
So a director's loan is basically your running tab, if you like, with the business. So we might add things to it, like we might put your salary in, for example. So we'll run a payroll and we'll credit that salary to the director's loan account. If there's enough profits after tax, then we can vote a dividend, an interim dividend perhaps, so that again we can credit the director's loan account. Now, your director's loan account cannot technically go negative, because at that point you then start running into sort of section 445 tax and interest if you don't pay it back, and disclosures and stuff.
What's section 455 tax and what is the rate of that at the moment? Because some people have no idea what we're talking about here.
Yeah. So section 445 tax is a tax that the company pays on the overdrawn director's loan account that's overdrawn 9 months after the year end. And the rate at the moment is 33.75%. So
ouch.
If it has its purposes. If you're a wealthy company, for example, and you've got plenty of reserves and cash in the bank, and you lend yourself 100,000, and then the company still has enough cash to pledge section 445 tax, you have to pledge the tax on the money that you've drawn, basically. So my company would give me 100,000 loan, and then it would give HMRC another £33,750 on top to cover the tax. So my company is quite out of pocket, but you know what? I've got £500,000 in the company. I'm not really fussed about that. The interesting thing is for that director is they actually have 100k in their pocket to go and do what they want with, maybe they're going to improve their house and then remortgage it later to put the cash back in the business. That's what happens quite a lot with a property business. I mean, we might do an intercompany loan with that. That's a different story. But let's say the director says, look, I don't want to pay 5% interest at the bank at the moment. I want to wait till interest rates maybe soften a bit in the future. I'm not sure what's going on. Can I borrow that money from the company? Well, yes, you can. You need to pay 2.5% benefit in kind loan interest at the moment to the company for that loan, to avoid any benefit in kind. And then if that loan gets paid back to the company, you then go back to HMRC and ask for your £33,750 back, and you're all square. If we then end up writing that loan off as a dividend, if the company can do it that way, we can then go and get that section 445 tax back, but then we have to put it on your personal tax return, and then you end up giving it back to HMRC on a personal aspect. But that 100,000 has then obviously ended up being sort of like 67,000 or so personally, because you've lost 30 grand of the personal tax. So directors' loans have their purpose, but you just need to be careful with them, because if you're just running and emptying the company bank account, you're going to run into problems left, right, and centre of HMRC. Clients will have, what's called bed and breakfast in. Oh, Matt, can't I just put the money back in the company after the year end and take it out? What if I take my ISA out and put it all back in the business on the 31st of March and then take it all back out again on the 1st of April? Well, I'm sorry, everyone knows what's gone on there. You can't just make it right for a day. That's not how it works, sadly. So you just need to get the right advice and make sure you're fully aware of like the implications of what's going to. It's not, a director's loan is really useful. It makes running the company really straightforward. You just take money in and out, but you have to keep a handle on it. And that's either your accountant setting up a little watch list on the dashboard in Xero or something. It's like, look, if that number ever goes negative, you need to give me a call, sort of thing, and we need to see what's going on. All the time it's positive, because we'll set recurring journals up to chuck everything in there and kind of automate it to keep it ticking over. And yeah, just set the plan and give the client the marker to watch for, really.
Matt, it's been an absolute pleasure to have you on the show. I've really enjoyed our chat. But to sort of wrap up, what I'd like to know from you, putting you on the spot a little bit, what is the best piece of advice you have ever received about money or business, and who gave it to you?
I would probably say so one of my last bosses is that if you don't bill, you'll never get paid. So if you don't get your invoices out on time, you've got no chance of getting the cash into the business. Even if you get an invoice out and the customer complains about it, there's still a talking point there. So you really must get your invoices out to customers as quick as you can to stand any chance of the business surviving. It's all about cash flow these days. Every business I've seen fail is just down to lack of cash. It's not that the business owner wasn't any good. They just simply ran out of money and overstretched themselves.
Well, final question. Okay. If you had 30 seconds to give me one honest, hard-hitting piece of advice to business owners listening right now, what would it be?
Make sure you've got an accountant. The right accountant that you can have a relationship with, because not all accountants are the same. It's a personal choice. Go through a few of them, find someone that you get along with, because if you get along, you'll do much better in life.
So following up to that, and we wrap up here, where can we find out more about Matt Hunt and Digivolve Accountants?
So you can Google Digivolve Accountants. We're on all the socials, various channels. I've got some stuff on TikTok, Instagram, Facebook. We're not hard to find. So yeah, have a look and let us know.
And we're going to have everything in the show notes as well. Matt, thank you so much, mate. You've been a fantastic guest. Yeah. And I wish you all the best, buddy, and have a great day.
All right, perfect. Thanks for having me on. Cheers, Chris.
Top man. Bye-bye.
Cheers.